Yes, and now we are live. Hello friends, good evening. So hope you are following the series of lectures of foundation accounting, okay, CA foundation accounting classes. We have so far covered 2 classes and today is the 3rd class, and we are going to cover journal entries relating to trade transactions, and we have already covered the very basic class of relating to accounting process, journal entries or basic journal entries, and modern approach of accounting and all in the previous classes. If you would have missed them, please I request you to go back and please ensure that you are viewing these videos. I'll put the playlist and in the description, friends. All the lecture series will be in the playlist and you can view them for absolutely free of cost. Here in this channel, we will be discussing the entire CA foundation and CA intermediate, all subjects, all theory topics and all problems from the textbook. ICAI textbook will be solving, and you can get all this for free. You have to do is just subscribe to this channel and click the bell icon so that you can get the updates whenever we are live or whenever we upload any video. You will also get CA related updates, career planning and job oriented stuff, and everything about chartered accountancy of India. Right, so let us jump into our today's topic, friends. So today's topic is entirely related to journal entries. We are in part 2. In that part 2 also we are in trade transactions. Yesterday we covered basic transactions, friends, okay, and today we are going to cover what? Trade transactions. So trade means what? In simply we are going to trade means what? Just buying and selling. Sir, normally, what do we normally buy and sell, sir? We normally buy and sell goods. We normally buy and sell what? Goods. Some people call it as stock. Okay, different names are actually, but actually depending on the usage, we have to change the terms. But see, people just simply interchange the terms. Okay, let us not get into that controversy now. Now, let us understand, first of all, the basic sense of goods, what is meant by actually goods, and let us understand the basic sense. To understand that, I want to explain you, friends, among all the assets that we have, normally we divide our accounts into assets, liabilities, expense and incomes, right? Now out of those assets, friends, we can subcategorize our assets into 3 subcategories. Okay, what are those 3 subcategories, sir? Normally you can call an asset as a fixed asset also, okay, or you can call an asset as an investment also, or you can call an asset as stock or goods, anything, whatever be the case, stock or goods. Normally you can subdivide your assets into these 3 subcategories, my dear friends. Now the question is, say for example, okay, if at all I have any particular asset, let me take an example of a building, my dear friends. Okay, I have some buildings, okay, and now this building, should I call it as a fixed asset, or should I call it as an investment, or should I call it as a stock? Question comes is, how should I actually subcategorize my building into as a fixed asset, or as an investment, or as a stock or goods? How should I actually take a look at them? Is it all depends on, my dear friends, the purpose of that particular asset. Understand? It means any asset can be categorized as a fixed asset also, or as an investment also, or as a stock also. Any asset can be made in that way. Understand? But in what situations, in what way we actually subcategorize, that is what we are going to discuss today, right? So building can be called as a fixed asset. For this purpose, any asset can be called as a fixed asset, friends, in case if the purpose is to use it in the business, my dear friends. Use means what? You use it for any purpose to run the business. Say for example, you take a building, the purpose of the building is to run your office, correct? Is to run your office. Now say for example, okay, so let me take this. So imagine you purchase one furniture. What is the purpose of furniture? You will put it in your office and use it. Your employees will sit on the chairs, they will use the tables, you will sit on the chair, you will use the tables. So furniture is also being used in the business. For example, machinery is also being used in a business. In what way, ma? We are actually producing goods out of it, which in turn will be sold by the company. So we are using machines to produce goods. Sir, I purchased a truck, so can I call truck as my asset, sir? Definitely you can call truck as your fixed asset, because truck is used in your business to bring the raw material to your business, to your factory, or to distribute goods to your customers. Correct, ma? For transportation purpose, you use your truck. So what am I trying to say is, any asset will be called as a fixed asset in case if it is being used in the business. Let the usage be anything. Let the usage be anything. As I told you, different examples. So out of my examples, you can find it out, right, friends? So the main purpose of fixed asset is that it has to be used in our business. In simple terms, we are discussing. Okay, so my way of teaching, friends, is something in the basic classes. We will not pressurize ourselves or stress ourselves with bigger terms, complicated terms. Okay, we'll take it very simple, and when the scenario situation comes, we will get into the actual terminology. We'll get into the technical and professional terminology as well, right, friends? So let us stick on to the topic now. Come back now. When can I call an asset as an investment, my dear friends? In case, in simple terms, if at all you are expecting some sort of additional income from out of that particular asset. Additional income. Sir, what is meant by this additional income, sir? Very simple, friends. Imagine you are running a business of a hotel. Okay, you are running a hotel business. So restaurant. Okay, let me be much clear. So restaurant business you are doing. So being a restaurant, what is your actual core business activity, my dear friends? You will buy eatables, right? You will buy eatables, and then fruits, vegetables, right? And all provisions you will buy, bring them, cook, and then you will sell it to the customers, whoever comes to your place, or you will deliver it to their homes. Correct, ma? So that is your core business. So when we talk about the restaurant business, that is your core business. Whatever be the money that you earn out of it is your direct business income. Correct, ma? It is your business income. But imagine a restaurant person, he has purchased one building, friends. Okay, in that building, he is not running his restaurant. Okay, there is one restaurant for sale, there is one building for sale. He went and purchased that building. Okay, he has got money, he paid, and he purchased the building. But he is not using that building for running his business. What is he doing, sir? He gave it on rent. Okay, why? Because unnecessarily, why to keep it vacant? Correct? So for that purpose, this fellow has given that building on rent, my dear friends. Now tell me, is earning rent is his main business? Never. Earning rent is not his main business. Earning money out of his restaurant is his main business. But the whatever be the rent that he is earning out of the building, it is his extra income, additional income. Understanding, friends? So in this case, what am I trying to say is, if at all you purchase any asset for the sake of additional income like this, you see, this additional income is not a part of your main business, my dear friends. Okay, I would like to take you through one more example. Imagine if a restaurant person opens another restaurant. For example, he purchased another restaurant. Okay, in that case, it is an extension of his business, and it is not treated as additional income, which I am trying to tell now. Understand? Additional income is something which is not related to our business, but we have purchased that in order to generate some extra income, just to support our income levels. Understanding, friends? Such a way. For example, I go and buy shares. For example, I go and buy shares. What do I get? I get dividend out of it. Earning dividend is not my main business, my dear friends. My business is running the restaurant. But I still purchase the shares in order to earn dividend, my dear friends. Okay. So in this case, if at all somebody purchases any particular asset in order to earn extra income, additional income, which is not relating to our main business, we call it as what, ma? We call it as our investment. Extra income, which is not relating to our main business. When will we call any asset as a stock, my dear friends? We will call any asset as our stock in case if the purpose of that asset is to resell. What, sir? The purpose of buying itself is to resell. I purchased it in order to resell. Got it, friends? Now take for example, you go to provision store. Okay, so provision store's owner, he purchases provisions not to use at his house, but what to do? He'll bring it in wholesale. He buy it in wholesale, bring it to his shop, and he sells it in retail. Correct, friends? So for him, provisions is a stock. Because what is his intention of buying it, ma? His intention of buying it is to resell. Correct, ma? In that case, we can call that particular provisions as stock. Understand? Take one more example. Let us take a stationery shop. Okay, stationery shop. He goes to market and in wholesale he'll buy books, pens, pencils, erasers, sharpeners, boxes, scales, and all these stuff. Brings to his shop and keep it ready for sale. Correct, friends? He'll not take it and use for his kids. Correct, ma? Probably some of it may be used for his kids, but the intention to buy all those goods is to resell. So in case, if at all your intention is to resell, my dear friends, if your intention is to resell, the purpose of buying itself is to resell, we call such an asset as what, ma? Stock or goods. We call that particular asset as what, ma? Stock or goods. Got it, friends? So as I told, any asset for this purpose can be treated as a fixed asset or investment or a stock. Sir, can building be stock, sir? Yes, of course. For example, some real estate people, what do? They keep on buying buildings and they keep on selling buildings. Correct, friends? So apartments and all, they'll keep on buying, keep on selling. For them, they can show buildings as a stock as well. Correct, friends? For you, it may be an asset because you're running your business inside it. But for them, it is stock. Okay, for somebody else, the same building can be investment because he is not using for his business. He is not actually selling it, but he is earning extra additional income called rent out of that building. So a building can be subcategorized into any of these categories. Okay, now why did you discuss all these stuff, sir? Very simple, ma. Out of these three, friends, fixed assets, investments, and stock, tell me which particular item will have more number of transactions, ma? Which item will have more number of transactions? Observe very carefully. First of all, your fixed asset will not have much transactions, because will you keep on buying and selling fixed assets? It means if for your office purpose, will you keep on buying buildings? If you do not want, will you keep on selling? No. Fixed asset is something which we purchase at the time of starting our business, or probably twice, thrice, or 4 times, or maximum 10 times in a year we buy our assets, and we will not keep on selling our assets also, right? So number of transactions relating to our fixed assets will be very, very less. Okay, so these are less in transaction. Okay, in number of transactions. Investments also, comparatively, these transactions also will be very, very less. Your business is not to buy and sell investments, correct? But what is your business? Your business is to buy and sell goods, stock. Correct, my dear friends? Now, first point that I want to discuss with you is, in the stock and goods only, the number of transactions will be very, 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 very high. Transactions are very, very high in nature, very high number of transactions. Moreover, profit that you are generating for your business actually lies out of buying and selling goods. Correct, ma? For example, you are running a provision store. So how you generate your profit? Out of buying and selling of stock only. So if that profit is not properly calculated, you will definitely go wrong with your business. Correct, friends? So for this purpose, we need a special way to treat this stock. We need a special way. Okay, that special way is actually dealt in this way. What do? The number of transactions are high, right, my dear friends? So whenever I say number of transactions are high, usually what all transactions will be there? Let me discuss that with you. First of all, I will purchase the goods, my dear friends. First of all, I'll buy the goods, right? I will buy the goods, namma. Whenever I buy the goods, I will take it to an account called purchases account. Again, I'm telling you, why am I taking it to, why am I dealing in a separate, different manner, friends? For 2 reasons. Number one, the number of transactions are very high in nature. Almost on a daily basis, we keep on buying stock and we keep on selling stock. Correct, ma? And for this purpose, we have to carefully treat with that. And moreover, profit, actually business profit lies inside the stock, the way we deal with the stock. So purchase, whenever I buy, I will take it to purchase account. Similarly, whenever I sell the stock, I will take it to a separate account called sales account. I will take it to a separate account called sales account. Understand? Now, sales, obviously, whenever I sell goods, it is my business income. Obviously, sales will be part of my incomes. Sales will be part of my incomes. Friends, whenever I earn, whenever I get new income, my dear friends, observe and please answer. Okay, incomes are categorized under credit. Okay, if you would have forgotten, or if you want a revision, or if you have missed the class, friends, please go back to my journal entries part 1, which I have given in the description below. Please go through that particular video. I have given the entire playlist link also, so please ensure that you are watching that video and getting a sense of what is actually this credit, debit and all this stuff I've discussed in detail, friends, right? So incomes, credit category. What does it mean? In case if they increase, we will credit it. In case if they decrease, I will debit it. Correct, ma? So that is what about incomes. Now coming to purchases, sir, when sales are incomes, obviously purchase should be part of my expenses. Obviously purchase should be part of my expenses. Now when purchase is part of expenses, expense coming under which category, ma? Debit category. What does it mean? If this expense increases, I have to debit, and if that expense decreases, I have to credit. This also very, very clear. Correct, ma? All these things we have already discussed, and of course if you have missed, please go back to the playlist and please check in journal entries part 1. I have discussed in detail. Right, my dear friends? Good. So it is class number 2 for your reference. In the main heading itself, it is very clearly given class 2, journal entries part 1. So please go through that class at any cost. Right, friends? Okay. Now, so when I buy, I'm taking it to purchase account. Whenever I sell, I'm taking it to sales account. Good, sir. But sometimes what happens, imagine you purchase the goods, but you found some faults with that. Okay, or the goods are not worthy, or some sort of damaged goods or spoiled goods, right? Where you want to give that back to your seller. Understand? You are a business owner, you purchased goods. For example, I bought garments on a bulk basis, friends. So when I brought them to my shop, then I understood that there are some shirts which are actually torn, okay, which are actually damaged or faded. Okay, so some kind of damage you have seen. So what will you do? Will you sell it as it is to your customers? No. What will you do? You will give that shirts back to the seller who has sold those stock for you. Acceptable, all of you? Yes. So if at all, whatever be the goods you have purchased, if you give it back, you take it to a separate account called purchase returns. Purchase returns account. Or some people also call it as returns outward. Returns outward account. So two ways you can actually take it, this or this, anything is fine. Either you can take it as purchase returns or returns outward. It is not, this is, what is this, ma? When purchase a part of expenses, purchase returns is reverse of expense. Correct, ma? I will say reverse of expense. I'll not say it as income. Okay, reverse of expense, because when you purchase, it is your expense. When you give back, your expense will decrease. Correct, ma? I'll say reverse of expense. If it is reverse of expense, friends, the rule should also be very clear. It comes under credit category. Expense coming under debit category. Nama. Obviously, reverse of expense will come under credit category. What does it mean? If it increases, you will credit. If it decreases, you will debit. Got it, friends? Similarly, your customers, what have you done? You sold some goods to the customers, and now they got some damaged goods or spoiled goods or something, some packing damage or something damaged. Now they want to give it back to you. Earlier you gave back to your seller, now your customers want to give back to you. What have you done earlier? You sold those goods to them, right? You sold goods to your customers, and now they want to give you back, which, if you are accepting those goods, you take it to an account called sales returns. Sales returns account. If they give back, we take it as what, my dear friends? Sales returns. And now, or people even call it as returns inward account. Inward account. The name itself is telling. Actually, purchase returns is returns outward, because you are sending the goods out. You are giving back, right? So from you, goods are going back. That's why it returns outward. And when I say returns inward, friends, you are accepting back from your customer. That's why returns inward. Now, when sales is a part of incomes, obviously sales returns will be part of reverse of incomes. Reverse of incomes. Sales returns will be part of reverse of incomes. Now, if sales is a part of, is coming under credit, and now this will come under debit. Correct ma? This will come under debit, my dear friends. So when it is debited, obviously if you increase, you have to debit it, and if it decreases, you have to credit it. If it decreases, you have to credit it. Correct, my dear friends? That is how usually you deal with these 4 types. First one is when you purchase the goods, purchase account. Whenever you sell the goods, sales account. Whenever those purchased goods, if you give back to your seller, you will call it you take it to purchase returns account. Whenever your customers give back the goods to you, you take it to sales returns. Got it? As a part of transactions, these 4 are usually used, my dear friends. These 4 are usually used. Okay, Nama? Good. Now, friends, apart from these 4, you need to understand this trade can happen in 2 ways, ma'am. In 2 ways it can happen. In what way? First of all, it can happen for cash. It can happen for cash. What is the meaning of for cash, my dear friends? You pay cash, take the goods. Simple. You pay cash, take the goods. Cash in the sense through cash or check or card swiping or any possible manner. It means you are paying immediately. You pay and then take the goods. Okay? Or else you sell after taking the goods. For example, you go to a shop. Okay? What will you do? Once you purchase the goods, you will swipe your card or you pay through any other UPI based payments, or you give cash and take the goods, right? Such kind of trade transactions, we call it as cash transactions. Okay, now my dear friends, now it means immediate settlement is already done, but there are some transactions which we call it as credit transactions. What is this credit transaction, sir? In simple terms, you will purchase today, but you will pay later. You will pay later. So today, friends, we are going to discuss both the cases, cash also, credit also. Similarly, when you sell the goods also, what will you do? You will sell the goods now, but take the money later. Whenever I say later, maybe after 3 days or 5 days or 10 days, 15 days, 20 days, 3 months, how much or be the time you want to give, you give and collect the money later. Understanding, friends? Which we call such kind of transactions as what, ma? Credit transactions. Which we call the transactions as what? Credit transactions. Got it, friends? So we have 2 transactions. One is cash, immediate settlement happening before and immediately after and before purchase, and then credit transactions. Settlement will happen after few days. Correct, my dear friends? Okay. So I hope you are able to follow. Good, ma. Now let us start. Now, friends, let us start first into cash transactions now, and then we will move on to credit transactions. Okay, Nama? Cash transactions, credit transactions. So let us start. By the way, I forgot to tell you. Now, sir, they said some trade has happened. It means buying or selling something has happened, but they did not tell us either for cash or for credit. They did not tell, sir. They mentioned, for example, we purchased goods, but they did not mention, is it for cash or for credit? They have not mentioned, sir. By default, I will take it as credit transactions. As far as our CA course is concerned, friends, we will take those goods as credit transactions. Understand, ma'am? Those transactions as credit transactions, if nothing is told. If it is told specifically that it is a cash transaction, I treat it as a cash transaction. If it is specifically told as a credit transaction, I'll take it as credit transactions. But if nothing is told, you treat it as credit transaction. Got it, friends? Good. Now, let me take you in detail of cash transactions first of all. Cash transactions. Let me start with cash transactions first. Okay, here I am. Now, cash transactions. So, as I told you, cash transactions. As a part of cash transactions, friends, I can buy the goods, even I can sell the goods also. But immediately what I will do, I will pay. Correct, ma? So first let me show you when I purchase. When I purchase goods. When I purchase goods, what will happen? First, let me discuss this with you. Okay, so when I purchase the goods, friends, observe very, very carefully. Okay, when I purchase the goods, which accounts will be affected? Obviously, just now we discussed, whenever I purchase the goods, I will take it to an account called purchases account. What will be the goods that I have purchased? I will take it to which account, ma? Purchases account. Obviously, and because you are doing cash transaction, friends, you are paying immediately. So when you pay immediately, what will happen? Either you will pay through cash in that case cash account will be affected. Or if you pay through bank, like giving a check or swiping your card or UPI based payments and all, what will happen? Your bank account will be affected. Correct ma? So either cash or bank, anything will be affected. Now tell me ma, purchase account is a part of expenses, and when you purchase, your total expenses will increase. Obviously from day one we have been discussing, when you make a new expense, your total expenses will increase. Amma, when expense increases, what should you do? Debit. Obviously, if you'd have missed, as I already mentioned friends, please go back to my playlist and check my journal entries part 1 class 2 of this playlist. Please ensure that you are viewing that video in full and learn it properly. Okay. And next, whenever I say cash or bank is a part of what ma? Assets. Cash or bank is a part of assets. And now I'm paying and taking these goods, correct ma? So whenever you pay, your cash or bank balance will decrease, my dear friends. Your cash or bank balance will decrease. Amma, when asset decreases, what you should do? Credit, obviously. So what is my journal entry here in this case, my dear friends? Purchases account debit. What will be the amount? To cash or bank account. Whatever be the case, you have paid. So this is the journal entry whenever I purchase my goods. Got it friends? Okay now? So purchase is a part of expenses, and when you purchase, your total expense will increase. That's why we'll debit it. And when cash or bank account is a part of assets, whenever you purchase by paying, your cash or bank balance will decrease. That's why we have to credit. Got it friends? Good. Now moving on to the next one. What is my next one, sir? Imagine if these purchased goods are returned. I am giving these goods back. I don't want this, take it back. Understand? We are giving our goods back to the seller. So we are doing what? Return of purchased goods. Return of purchased goods. So whatever be the goods I have purchased, I am giving them back now. Take it back. I don't want. Okay, Nama? Right. Now, friends, observe this very, very carefully. Which accounts will be affected now in this case, my dear friends? Which accounts will be affected, ma? Start. Now, first of all, already we discussed purchase returns. Purchase returns account will be affected, as well as, Amma, you have done this transaction for cash. Correct, Amma? So obviously, see, when you buy the goods, you have paid cash. When you are returning, you will take cash. Na? So obviously here also your cash or bank account will be affected. Now, cash or bank is a part of assets. And when you return your goods back, when you have earlier purchased for cash, you will take money back. You will take money back, Namma. When you take money back, tell me, my dear friends, your cash balance will increase. When assets increase, what you should do? Debit, obviously. Debit. Correct, ma? Now, purchase returns is what, friends, already discussed with you. What is that? Reverse of expenses. Already discussed. Reverse of expense. Now, reverse of expense means what? And that too, when you do purchase returns, when you return it, and that purchase returns will increase. Whatever you have returned, the total balance of what you have returned will increase. When it returns, what you should do, my dear friends? Credit. Just now I have discussed. Please observe this. Purchase returns. Just now I have discussed purchase returns. Because it is reverse of expense, I will take it to credit. What does it mean? If it increases, I will credit it. If it decreases, I will debit it. Correct, ma'am? So what have I done here? I have purchased the goods. Reverse, I call it as reverse of expense, and that expense increases, I will credit it. Got it, friends? So what is the journal entry in this regard, my dear friends? So the total journal entry will become what, ma? Cash or bank account debit to purchase returns. To purchase returns account. Cash or bank account debit to purchase returns account. This is going to be my journal entry, friends. Got it, everybody? Okay. Right, friends? Good. Next. Next, friends. Next. Start. So now till now we have seen two transactions in relation to what? Purchase and purchase returns, and that too we are sticking on ourselves only to cash transactions, friends. Now let us start with sales. Now third, so when you sell goods, what will be my transaction, friends? Which accounts will be affected? Now, as we were discussing, first of all, when you sell goods, that particular item has to be taken to which account, ma? Sales account, already discussed. And that too, you are doing cash transaction. Whenever cash transaction you do, obviously when you sell the goods, you will take money in the form of cash or bank. So cash or bank account will be affected. Tell me, my dear friends, sales is a part of, already discussed, what? Incomes. Now, when you sell goods, your incomes will increase. Amma, incomes increase, what you should do? Credit. Correct? Incomes increase, credit. Similarly, cash or bank is going on. Now, when cash or bank is going on, cash or bank is a part of assets. And whenever you sell the goods, what will you do? You will take cash. When you take cash, your cash balance will increase. When assets increase, what you should be doing? Debit, obviously, we have already discussed in our modern approach of accounting, correct? Now, so what is going to be the journal entry, my dear friends? Cash or bank account debit to sales account. Cash or bank account debit to sales account. That is going to be my journal entry whenever I sell my goods. Correct, ma? Just a minute, friends. I'll take up few more papers for you. Okay. Right. Okay. So that is the journal entry whenever you sell the goods. Correct? Now let us move on to our next topic, ma. So our next topic is going to be what? Sales returns. Correct, ma? Whenever whatever you have goods that you have sold for cash, now your customers gave it back to you. Your customers do not want that and they gave that goods back. So obviously when they give back, you will give them their money back. Correct, ma? Obviously. Now we are discussing the fourth transaction, cash transactions. What is that, ma? Return of sold goods. Return of sold goods. Return of sold goods. So whatever you have sold earlier, you are selling it. So you are taking it back. Okay, Nama. In this case, which accounts will be affected? Already discussed. Whenever whatever the goods that you have sold, if they are returned back, you will take it to which account, my dear friends? Sales returns account. Correct, ma? So sales returns is reverse of incomes. Reverse of incomes. And what is happening? Your total sales returns is increasing. When total sales returns increases, what you should do? Debit. Just already at the beginning of today's class only we discussed what is that, ma? Sales returns. Observe here. So sales returns is a reverse of income coming under debit category because it is reverse of income. And if it increases, we have to debit. Just at the beginning of today's class only we have discussed. Correct? Now, sales returns, debit, sir. And then what will you do? Immediately you will give your cash money back either through cash or bank. Obviously cash or bank account will be affected and it is a part of assets. When you pay back, it will decrease. Your cash or bank balance will decrease. When cash or bank balance decreases, what will happen, friends? You have to credit it. You have to credit it. So what is going to be my journal entry, my dear friends? Here, sales returns account debit to cash or bank account. Sales returns account debit to cash or bank because you are returning the money. So your customers gave the goods back and you are giving money back to them. Got it, friends? So these are the 4 journal entries, friends, when in the cash transaction, whenever any transaction happens. Got it? So again, I'm just quickly revising it. So whenever you purchase the goods, purchase account debit to cash or bank. Whenever those purchased goods, if you return back to your customer, your seller, vendor, then cash or bank account debit to purchase returns. Whenever you sell the goods, cash or bank account debit to sales. Whenever the sold goods, whatever be the goods that you have sold, if they are returned back to you, friends, sales returns account debit to cash or bank. Got it, friends? These are the 4 journal entries when it comes to cash transactions. Okay, sir, I understood about the cash transactions. Now let me discuss with you about credit transactions. Okay, Nama? So about credit transactions, let us have a look at it. Come on. Cash transactions over. Now credit transactions. There is a lot to discuss. Credit transactions. Credit transactions. Got it? So now, whenever we talk about credit transactions, what did I tell? I will sell goods now, but I will collect money later. Or I will purchase the goods today. I'll go and buy the goods today, but I will pay later. It means in credit transactions, whether you purchase or you sell, in both the cases, are you going to pay immediately? No. You will take some time and then pay or receive the money. Okay, now friends. Now, how do we take those transactions together? Let me take a small example for you, and then I want to take it forward. Now, let us see. Let us imagine there are two people. One fellow, Mr. A, and other fellow, Mr. B. There are two people. Okay. Now, imagine A is a seller. A is a seller and B is a buyer. It means, what does it mean? A is selling goods to B. A is selling goods to B. Okay. So how much worth of? So what is he selling, friends? Again, I'm telling you, he is selling some sort of goods, and that too worth of, say, for example, some 10,000 rupees. Some 10,000 rupees worth of goods are being sold by A to B. A is selling 10,000 rupees goods to B. Okay, now friends, imagine if B pays immediately, it becomes a cash transaction. But here what is happening, you know, A told B, my dear B, you need not pay immediately. You please take your time, pay me in, say, for example, 30 days. Pay me after 30 days. Okay, so pay me after 30 days means what? Say, for example, what is today's date, my dear friends? Imagine the transaction has happened today. For example, it has happened on 7th of July 2020. Okay, so from here he can take, he can pay after 30 days. So July month has got 31 days. So he has to pay approximately on 6th of 7, 2020. Approximately, I'm taking, friends, not exactly. Probably it could be correct also. Okay. Approximately he has to pay on which date, ma? 6th of August. 6th of August he is supposed to pay after 30 days. Correct, ma? 6th of August. This kind of transactions where the actual sale has happened on 7/7/2020, but the transaction, the settlement will happen on 6/8/2020. So let me take this example forward so that you will understand the entire series of transactions. Got it? Let us see. So as soon as you give this on a credit basis, what will happen? You know, A, till now he is a seller. For whom he is seller, friends? A is seller for B. B is a buyer for A, not for you and me. Correct, ma? A is a seller for B and B is a buyer for A. Correct? But now, because when these transactions have taken place on credit basis, we will promote them to the next level. What is the next level? You know, this seller will be renamed as creditor. The seller will be renamed to what, my dear friends? Creditor. Seller will be renamed to creditor. Seller for whom? B. Creditor for whom? B. Not for you and me. Got it? So A is a seller for B. Of course, A becomes a creditor for B. When A sells goods to B, the goods on credit basis, friends. On credit basis. Got it? Now, till now, buyer. B is a buyer. Buyer for who? Buyer for A, not for you and me. Correct? Buyer for A. Now that buyer will be renamed as debtor. Understand? That buyer will be renamed as what, ma? Debtor. So as soon as the credit transaction takes place, seller will be renamed as creditor, promotion. Okay? And buyer will be renamed as debtor, promotion, because they are doing credit transaction. And again, I'm telling you, friends, creditor for whom? For B. Debtor for whom? for A, not for you and me, for anybody else on this earth. It is only a relationship. Debtor and creditor relationship is only between A and B. That's it. It is not between anybody else. Only between buyer and seller. Got it? Only between A and B. A is a creditor for B and B is a debtor for A. Okay, Nama? Good. Now, friends. Now, creditor. Normally, whenever I talk about, now let us see some details about debtor and some details about creditors as well. So let us see some details about debtors. Okay, Nama? So I hope you understood this particular explanation. Okay, later when you pause this video, please make a note of this chart also. Okay, I hope you are making a parallel running notes also, friends. So please ensure that you are writing the notes as well. Or else what I'm going to do is I will take snapshots of all my running notes. Okay, class wise I will take a snapshot, and after the class I will upload onto our website, friends. You can go to that website and you can actually download these running notes as well. Okay, what are the notes I'm actually writing on the paper right now. Okay, so you can take it for free of cost. Let us say, friends, now debtors. Who are debtors, friends? Okay, so who is my debtor? You know, very simple. Debtors are those people from whom we have to receive money. We have to receive money. We have to receive money. Got it? Now, as I told you in my earlier case, B became a debtor for whom A, because A has to receive money from B. A has to receive money from B. So, in simple terms, in general terms, debtors are those from whom we have to receive the money. Got it, my dear friends? Okay. Now, whenever we have to receive the money, friends, it generates a right for us. It generates what? A right to take the money. Obviously, I sold the goods. A sold goods to B. Correct, ma? A sold goods to B and B has to pay money back to A, and A has got the right to take that money back. Correct, my dear friends? In that case, we call that debt, we say on the debtors, we have right to take that money. We have the right to receive the money. In the first class itself, I told you, whenever you have a right on anything, you classify them as what, ma? Assets. You classify them as what? Assets. That's why our debtors are categorized under assets, my dear friends. Your debtors are classified under assets. Got it? Okay. I hope all of you are able to understand. All of you are able to understand. Right? So debtors are classified as what? Assets. What does it mean? If at all debtors increase. So debtors are part of what, ma? Assets. Assets increase, what you should do? Debit. Similarly, if debtors are part of assets and if those decrease, my dear friends, you have to credit. Simple terms. And usually debtors is a it's a general notion, friends, general term. For example, you do not know the name of the customer that you have sold. They in the question and all, in exams and all, they just simply given that you sold goods to customers on credit basis. Simply, they did not mention the name of the customer. Then you will use the term debtors. If they say specifically to a person, for example, in my current example, A sold goods to B. Now I will open a separate account called B account. Okay, and now B account is my debtor. B account is my debtor. Understanding, friends? Imagine I sold goods to Rama, then Rama becomes my debtor. I will open an account called Rama account. I sold goods to Hanuman, then Hanuman becomes my debtor. Understand? I'll open a separate account called Hanuman account. So like that we will manage. Okay, now friends. So how debtors became an asset? I hope you understood. Okay. Now let us understand about creditors. Okay, creditors. Now creditors. Who are these creditors, friends? In simple terms, to whom we have to pay. We have to pay. To whom we have to pay. Okay. So whom we have to pay, my dear friends? To whom we have to pay? Now, imagine in the first class itself, I told you, wherever you have to pay, it becomes your burden to pay. Correct ma? So whenever that burden arises, you call it as what, my dear friends? Liabilities. Okay nama? You call it as what? Liabilities. You have that duty to repay that money. You have the duty to repay that money. So you categorize creditors as a part of what ma? Liabilities. So creditors part of liabilities. In this example, let us see a seller, he became a creditor. Creditor for whom? B, because B has to pay money to A, so A becomes creditor of B, liability of B. So B has to pay that money back. Okay, nama? So even in this case, what do we do? B will open an account called A account. B will open an account called what? A's account. Now in this A's account, my dear friends, so A account is a part of creditors. Now creditors is a part of liabilities. Creditors is a part of liabilities. What does it mean? If at all these creditors increase, I will credit it. In case if they decrease, I will debit it. Creditors coming under which category ma? Liabilities coming under credit category, correct? That's why if they increase, I will credit them. If they decrease, I will debit them, friends. I will debit them. Got it, friends? So that is how usually I manage working with debtors and creditors. Got it? So in simple terms, debtors are part of assets, and in simple terms, creditors are part of liabilities. Got it, friends? That is how we think. Now let us get into the transactions, friends. Quickly, let us see how the transactions take place. So I would like to take you through separately in the books of buyer separately and in the books of seller separately. Got it? In the books of buyer and in the books of seller. Okay. So let me take you through, friends, in clearly. Okay. Always I align properly so that you get a good feel of the notes. Okay, so how do I buy and sell? First, let us see if at all I am a let us take buyer. Imagine I am a buyer first. Okay, imagine I'm a buyer. It means in whose books we are writing, my dear friends, now? In the books of B. In the books of B, Mr. B. In the books of B. Obviously, A is seller, B is buyer nama. So we are writing in the books of B. Okay now? Right. Now, whenever first transaction I would like to discuss with you. That is whenever you buy the goods. Buy the goods. When you buy the goods, which accounts will be affected, my dear friends? Already I discussed with you, whenever you buy the goods, obviously purchase of goods will go to which account ma? Purchases account. That will not change. Purchases account will be there. Correct ma? Now purchase account comes under which category ma? Expenses. Now whenever you buy the goods, your expenses will increase, your purchase will increase, expense increase. What will happen? We have to debit it. Now are you paying now? No, you will pay later. Sir, whenever you have to pay later, that becomes part of your liabilities. Correct ma? So what is your liability here? Mr. A is a part of your liability, so I will take A account. Or if you do not know the name of the vendor, in simple terms you can take it as, in general terms you can take it as creditors account also. You can say A's account, or in general sense, okay, you can call them as creditors account also. A's account or creditors account is a part of what, my dear friends? Obviously liabilities, because I have to pay them. And when you buy the goods, your liability will increase, obviously, because the more that you buy, the more you have to pay back. So obviously liabilities increase. Liabilities increase, what you should do ma? Credit. Liabilities increase, you have to credit. So what will be my journal entry in this regard, friends? Purchases account debit to A account, or in general sense creditors account. Creditors account. So this is going to be my journal entry whenever you buy the goods. Okay, next month. Right, sir, I purchased goods, sir. Okay, imagine after buying the goods, I will take different cases, friends. What if this would happen, that would happen, and all these stuff. I would like to take some separate cases for you. What are those cases? First case, imagine if at all I pay or settle settle on due date. So as per my example, which is my due date ma 6th of August 2020, you are supposed to pay that money back. Imagine you have paid it. You have paid it. So if you pay it, my dear friends, what is happening? You are paying back to whom? Your creditor. Liability you are paying back. Obviously, if you pay back to your liabilities will decrease. Your liabilities will decrease. Correct, ma? So obviously, I will take the same example now. Observe very carefully, friends. So what will happen? Your A account, or in general sense, creditors account will be affected. Creditors account will be affected. Now whenever A's account or creditors account is affected, my dear friends, these are part of what ma? Liabilities. Obviously part of liabilities, because we have to pay them na, liabilities. And sir, you have to pay them, they become liability, but now you are paying them. When you pay back, your liabilities will decrease. Obviously when you pay back, your liabilities will decrease. Amma, whenever you pay back, your liabilities decrease. What you should do? Debit. Correct, ma? You have to debit. Similarly, now you are now paying. When you pay, your cash or bank account will be affected. Correct, ma? So what will be the journal entry? So which account will be affected? Cash account or bank account will be affected. Cash or bank is a part of where, sir? My assets. And when assets, when you pay cash or bank, so what will happen, ma? Your cash or bank balance will decrease. Cash or bank balance decrease. What you should do? Credit. Obviously when cash or bank account is affected, when you pay, cash or bank balance will decrease. Obviously you have to credit it. So what will be my journal entry, my dear friends, in this case? So a cash or bank account has to be credited, A's account has to be debited. So journal entry will be A account or creditors account debit to cash or bank account, to cash or bank account, to cash or bank account. Got it, my dear friends? So that is how I make the journal entry when I settle it on the due date. It means I am paying my creditor on due date. Okay, Nama? Okay. Now in this regard, friends, imagine okay, two transactions discussed, right? Okay, let me take you through. Okay, fine, no problem. Imagine I am returning the goods. I am returning the goods. Okay, that is my third transaction. I purchased the goods, but I did not like the goods. Okay, I want to return back. Okay, so I will say return of purchased goods. Return of purchased goods. So whenever you have purchased the goods, and now what are you trying to do, my dear friends? You are returning it back. Returning it back. So whenever you return it back, so what will be the journal entry, my dear friends? That is where we are focusing now. Whenever goods are returned, purchase returns account will be affected. So purchase returns account will be affected. Imagine earlier how much you purchased, ma? 10,000 worth of goods you have purchased. Now in this, imagine you are giving back 2,000 rupees worth of goods, saying that I don't want this 2,000 rupees goods, take it back. We are giving back how much worth of goods, ma? 2,000 rupees worth of goods. In that case, tell me, 10,000 out of 10,000 you are giving 2,000 back. It means your liability will also come down to 8,000. Correct, ma? Earlier you have to pay 10,000, ma, but now you have given back 2,000 rupees worth of goods. It means you still have to pay how much? 8,000 rupees only. Correct, ma? After returning back only also you will pay 10,000. No, ma, you are not full, right, to pay full amount. So for that reason you will pay only 8,000 rupees. Okay, sir. This is also fine with me. Now observe very, very carefully. 10,000 becomes 8,000 now. Now in that case, what will happen? Your liability will decrease. Your liability will decrease because earlier 10,000 rupees payable, now it will become 8,000. Good. In that case, my liability will also decrease. Who is my liability? A account, or in general creditors account. In general creditors account. These both are affected. Now purchase returns is what, ma? Reverse of expense. We already discussed with you. Now reverse of expense, whenever it happens, you have to credit it. Just now discussed. Correct, ma? Reverse of expense will be credited. And now whenever A account or creditors account is affected, this is a part of liabilities. Now, whenever this liabilities, friends, here in this example, what is happening? Your liabilities are decreasing from 10,000 to 8,000 after you give 2,000 rupees worth of goods back. You gave back, so your liability will decrease. Liabilities decrease. What you should do, ma? Debit. What you should do? Debit. So now, what will be the journal entry in this case? A's account or creditor's account will be debited. Purchase returns account will be credited. So let me take the journal entries to you, friends. So what is the journal entry, ma? Yeah. A account, or in simple terms, creditor's account debit to purchase returns account. To purchase returns account. To purchase returns account. Got it, friends? So this will be the journal entry. Whenever whatever be the goods I have purchased, if at all I return back, this will be the journal entry. Got it, friends? So okay, sir, I understood this. Now let me take you through next set of transactions. So what is that? In the books of buyer only, we are still in the books of buyer only, ma. So let us discuss. So number 4th transaction. What is my 4th transaction, sir? Imagine when discount is given by seller to the buyer. Sir, what is that happening now? When seller gave discount to buyer, friends. Okay, Nama. Of course, friends, one thing I want to make sure, friends, little bit of discussion about the discount, a little bit of discussion about the return of goods. At the end of this particular class itself, I'm going to make a special note, special points about this returns and then what do you say, discounts, friends. Please ensure that you are watching till the end and get some special information on that. Okay, Nama. So what is happening when seller gives discount to us? So what is happening? Actually, B has to pay money to A. Correct, ma? We have to pay money. Pay money to A. Correct, ma? All of us know. How much? 10,000. Now, imagine A is in urgent need of money now. A is in urgent need of money. In such a way that he came to you and asked, okay, who are you? B. Okay, he came and asked, he came and told you, boss, I want money very urgently, friends. So how much you have? So whatever be the case, you have to pay me how much? 10,000 rupees. Now do one thing, if you want to settle it right now, you please take 500 rupees off and please pay me 9,500 immediately. I'm in urgent need of money. I have to go for hospital. I have to pay school fees or some urgent need. I have to pay immediately. So you pay me immediately. Whatever you have, 9,500 you pay and settle it. But actually, how much worth of goods you have purchased, ma? 10,000 rupees worth of goods you have purchased. But how much you are paying now? You are paying only 9,500. Remaining 500, do you have to pay later? No need. It is your pocket. It's your saving. You need not pay that money. Correct, ma? Such kind of saving we are talking about, which we call it as discount given by seller to us. It means from our point of view, we are receiving. Understand, ma? From B's point of view, what is happening? Discount is being received. Discount is being received from B's point of view because you are taking a discount of 500 rupees. But from A's point of view, that discount is given, or some authors write it as allowed discount. Discount allowed. Anything can be written. So A is allowing the discount and B is receiving that particular discount. In this case, how we have to deal with that? Very simple. We in the books of buyer only we are discussing now. Correct, ma? Of course, in the books of seller we'll discuss in few minutes. In the books of buyer, what will happen, friends? Obviously, you are paying less, but you are paying. Correct, ma? So because you are paying, your cash or bank account will be affected. Cash or bank account will be affected. Correct, ma? Okay. So when cash or bank account is affected, cash or bank is a part of assets. Now in this transaction, what are you doing? You are actually paying. When you pay, your cash or bank balance will decrease. Your cash or bank balance will decrease. Amma, when cash or bank balance assets decreases, what you should be doing? Credit. Correct, ma? You have to credit it. All of you agree with me? Good. Next, sir, what is happening now? You are paying the money back to your creditor. B is paying to A. So obviously, who is A, ma? Liability of B. Now that liability will also decrease. Correct, ma? So liability. What is the name of my liability? A account, or in general terms, I have taken it as creditors account. Now this A account or creditors account is a part of what? Liabilities. Now when you repay, my liabilities will decrease. Amma, liabilities decrease. What you should be doing? Debit. Debit. Got it, friends? Now let us see with amounts. How much money you are paying, friends? 9,500 you are paying. Correct, ma? 9,500 you are paying. And how much liability will decrease? Full 10,000 liability will decrease. You need not pay that 500 again, right? Sir, 9,500 credit to 10,000 debit, sir. Okay. What about remaining 500 rupees, sir? That is where we took the discount, right? That also has to be accounted. And the name of the account I will give it as discount received account. Discount received account. Understanding, friends? Discount received account. So discount received, sir, whatever you have to pay, you are saving now. Because you are saving, I will take it as a part of my incomes. I will take it as a part of my incomes. Amma, whenever I take it as a part of my incomes, my savings are increasing. Obviously 500 rupees saved, amma, my total savings will increase. Amma, when incomes increase, what you should be doing? Credit by 500 rupees. Credit by 500 rupees more. Got it, friends? What does it mean? Cash account and discount received account will be credited, and A account or creditors account will be debited. Got it? So let us see this in action. So what is the discount, my dear friends? Out of this 10,000 minus 500, so then we are paying only 9,500 now. Okay, and full settlement. Full settlement. Let us see this as a journal entry, my dear friends. So what will be my journal entry, my dear friends? A account, or in general sense, creditors account debit. How much, ma? With amounts I will write now. Okay, full 10,000 rupees of your liability will be going off. Next, to cash or bank. Oh, okay, so to cash or bank. To cash or bank account. Tell me, ma, how much amount am I paying now? Only 9,500. Sir, what about remaining 500 rupees, sir? It is my income. So to discount received. To discount received account. So this is my journal entry whenever discount is given. Okay, na, ma'am? Okay. So now imagine the fifth situation. What is fifth situation? Is the last situation, okay, in the books of buyer. Then we'll discuss books of seller. Okay, what is my fifth scenario, my dear friends? If Mr. B means whom? We only we are writing for the books of buyer, right? Now the buyer goes for insolvency. Going for what? Insolvency. What is insolvency? In simple terms, I am unable to pay my money back. Whatever be the money I have to pay, I am unable to pay that money back, which we call it as insolvency. Of course, about insolvency, friends, we will have detailed discussions, and a new guest has come, one ant. Hello, please get off my notes, please. Thank you. Okay, don't disturb us. Okay, again it has come. Okay, bye. Thank you. Now, friends, Mr. B, buyer, goes for insolvency. About insolvency, we will discuss in detail later. But now, we will stick on ourselves only to one small point, that we are unable to pay. We are unable to pay. In that case, let me take an example. Again, B has to pay how much money to A, my dear friends? 10,000 rupees. But I am unable to pay, for example, 7,000 rupees I am not able to pay. I can't pay 7,000 rupees. I became insolvent. What is insolvency? Wait, my dear friends, we will learn in detail in next further chapters, further topics. But now let us stick on ourselves only to this point. Okay, we are unable to pay how much? 7,000 I am unable to pay. I am able to pay only 3,000 rupees. I am able to pay. Okay, A also will have to take that 3000 rupees and shut and keep quiet. That's it. He cannot talk. That is where insolvency is all about. About insolvency, we'll discuss a further discussion later. Okay, so in this case, what is happening, ma? Out of 10,000 rupees, how much we are not unable to pay? 7,000 rupees we are unable to pay. How much we are able to pay? We are able to pay 3,000 rupees. Got it? So in this case, how the journal entries usually move on. Let us start, friends. So which accounts will be affected, sir? Obviously, you are paying, right? So when you pay, your cash or bank account will be affected. Okay, and obviously you are paying to whom? Your creditor, obviously. So his account will also be affected. A account, or in general terms, creditor's account will also be affected. Okay, so cash or bank is a part of which account? Which category, ma? Assets category. Correct, ma? When you are paying, your assets, cash or bank balance will decrease. Amma, assets decrease. What you should be doing? Debit. Sorry. When you pay, your assets will decrease. Assets decrease. What you should do? Credit. Correct. Not only that, whenever A or creditor's account, this is a part of what, ma? Liabilities. Good. Now, whenever it is a part of liabilities, you are repaying. Whenever you repay, your liabilities will decrease. Liabilities decrease. What you should be doing? Debit again. Let us understand. Cash or bank, how much are you paying, ma? You are paying only 3,000. Cash or bank, you are paying how much, ma? 3,000. But your liability, how much will be going off? 10,000 rupees liability will go off. That's what I'm trying to say. You became whom? Insolvent. When you become insolvent, whatever you have to pay, whatever you have in your hand, that only you will pay, and remaining will be waived off. It means actually you have to pay 10,000. You are paying 3,000, which I have taken to cash or bank. How much ever you are unable to pay? How much you are unable to pay, ma? 7,000 rupees you are unable to pay, ma? Whatever you are unable to pay will be taken to an account called deficiency account. This is very important. Whatever you are unable to pay will be taken to which account, ma? Deficiency account. Got it? So deficiency account, actually this is something like which you are unable to pay. Correct, ma? So whatever you are unable to pay, friends, obviously it's a part of your liability, and of course that liability will decrease now because you are unable to pay. Correct, ma? Sorry. Sorry. It's a part of your liability which will increase, sorry, because which you are unable to pay now. You are unable to pay now, probably we may have to pay later, or it will be waived off. Whatever be the case. Now in that case, what it will done, friends? We will be crediting it. Credit by how much, ma? 7,000. So what will be the journal entry, my dear friends, in this regard? Observe very carefully. Journal entry will be A account, okay, or in general terms, creditors account debit. How much, ma? 10,000 rupees of your liability will be going off. Next, to cash or bank account. So how much are you paying now, ma? Only 3,000 you are paying. Sir, what about remaining 7,000 rupees, sir? You are unable to pay, which you will be taken to an account called deficiency account. You will be taking whatever you are unable to pay to which account, ma? Deficiency account. This deficiency account is very important. Why is it important? I will discuss with you later. But now, whenever B, it means we ourselves, for the business that we are actually doing, if at all we go for insolvency, so whatever be the money that we are unable to pay will go to deficiency account. Got it, friends? So these are the 5 journal entries usually we see in relation to buying the goods in the books of buyer. Now let us quickly see in next 10 minutes what actually be the journal entries in the books of seller. Okay, nama? In the seller books, what will be the journal entries? Come on, let us start. In the books of seller. Now we are seeing in seller. Seller means whom, ma? In the books of A. Correct, ma? In my transaction, who sold goods to whom? A sold goods to B. Now we are seeing the transaction in the books of seller. Got it? Observe very carefully. So what is my first transaction? So whenever you sell goods, whenever you sell goods, and that too on credit basis, you are actually selling on credit. Okay, whenever you sell the goods on credit basis. So which accounts will be affected in this case, my dear friends? I already discussed with you. First of all, because you are selling the goods, you will take it to sales account. You will take it to which account, ma? Sales account. Similarly, now sales account is a part of incomes. Now whenever you sell goods, your incomes will increase. Ma, incomes increase, what should I do? Credit. Incomes increase, what you should do, ma? Credit it. Similarly, now what is happening? Are you taking the money now? You're not taking money now, you'll take later. Because you're taking later, it creates a right for you. It creates a right for you. Try to take that money. What is your right, ma? The name of your right is Mr. B. So in his name, you will create an account called B's account, or in simple terms, in general terms, you can even call him as what, ma? Debtors. So in general sense, you can call him as debtors. So debtors account also can be taken. Now he is your right. So you cannot go and sit at his home and saying that you are my right. Okay, his wife or husband will kill you. So it is not right in the sense right to take the money. Okay, whenever you have the right to take the money, obviously you call it as a part of your assets. So whenever you sell the goods, your rights will increase. So whenever rights increase, assets increase, what you should be doing, friends? Debit. So what is my journal entry in this case? B account or debtors account debit to sales account, to sales account. Okay, Nama, to sales account. So this will be my journal entry whenever I sell the goods on credit basis. Now let me take you through next example. So what is happening? Second case. Now special case will start. Now imagine we are receiving the money on time. Okay, Nama. So it means when we are receiving money on due date. Okay, so what is happening? We are taking the money on time. 10,000 rupees he has to pay on 6th of August. He is paying now. Okay, when he is paying means your buyer is paying. Now you are a seller, right? Now from your point of view, you are receiving the money. So whenever you receive the money, so what will happen? Your cash or bank will be affected. Cash account or bank account will be affected. Now cash or bank is a part of assets, and when you receive the money, your cash or bank balance will increase. Assets increase, what you should be doing, ma? Debit. Similarly, till now you are saying B is your right. I have the right to take the money from B, you are saying, but now he has paid the money. After paying the money also, can you still say you have the right to receive money from that fellow? Definitely no. So obviously what will happen? That right will decrease. So what is the name of your right? B account, or in general sense, general terms, debtors account. They are also part of what, ma? Assets, because they are your right, but that right will decrease because they have paid money to you. Asset decrease, what you should be doing? Credit. So what will be the journal entry in this regard, friends? B account, or in general sense, debtors account debit. Oh, sorry. So what is the journal entry, my dear friends? Cash or bank account debit. You are receiving the money to B account or debtors account. To B account or debtors account is your journal entry. Got it, friends? So this is the transaction. This is a journal entry when I receive the money. Okay, my explanation is very, very important, friends. Okay, beyond anything else, my explanation is very, very important. Okay, please focus on the explanation part. Okay, friends, let us focus. Just a moment. You got a shadow, right? So I'll remove this shadow part. Okay, so that there is no disturbance for you when you are watching the videos. Okay, so that is the case, my dear friends. Now what will be the next transaction? Let us see. So when you receive the money, this is the transaction we have already seen. Now let us see the next transaction. What is my next transaction is all about, sir? Third. Now, sales returns. Sales returns. It means, imagine you sold 10,000 rupees worth of goods you sold, but what has happened later? Your customer gave you back 2,000. 2,000 sales returns has happened. In that case, how much balance he has to pay? Only 8,000 rupees will be the balance that your B has to pay to you. 2,000 rupees worth of goods he has given you back. He has to pay you only 8,000 rupees now. Correct, ma? How will you take this transaction? Simple. Whenever sales returns happen, we will take it to sales returns account. Now sales returns account is a reverse of incomes. Amma, whenever reverse of incomes happens, what you should be doing? Debit. Already discussed at the beginning of today's class. Correct, ma? Already discussed. Please ensure that you are going through that. Next, what is happening over here? Till now you are saying debtor, he has to pay me 10,000, he has to pay me 10,000, but he has given 2,000 rupees back to you. Now how much he has to pay you? 8,000. It means your right to receive the money will come down from 10,000 to 8,000. It means your right will decrease. Correct, ma? So what is the name of your right? B account. B account, or in general terms, debtors account. Debtors account. Debtors account is a part of what, ma? Assets, and that asset balance will decrease from 10,000 to 8,000. It will decrease. Whenever assets decrease, you have to credit. Correct, ma? So what will be the journal entry in this case, my dear friends? Sales returns account debit, okay, to B account, or in general sense, debtors account. In general sense, debtors account. Sales returns are in general sense to B's account or debtors account in general sense. Got it, friends? So this is the journal entry I write whenever I return my goods back. Oh, sorry. Whenever customers give their goods back to me. Okay, now. Okay. So let us see my fourth transaction as a part of it. Fourth transaction. What is my fourth transaction, ma? Now, if at all I allow or give discount to customers. Whenever I allow or I give discount to my customer. Now what is happening? Out of A has to receive how much, ma? 10,000 rupees we have to receive. But what we said, you please cut off 500 rupees and you pay me only 9,500. Remember, ma? So B will pay only 9,500 back to A. B will pay only 9,500 back to A. All of you remember this transaction, ma? Now let us see this in action. Now when this happens, you are giving discount. Correct, ma? So it means from your side, you think you are from seller point of view. Earlier you have to receive how much? 10,000, but you are receiving only 9,500. 500 is a loss for you. Correct, ma? Think from seller point of view. From seller point of view, what happens? You have to you have sold how much worth of goods? 10,000 rupees worth of goods you have sold. Correct? But how much you are giving him discount? 500. So you are receiving only 9,500. So you are receiving less. Amma, if you are receiving less, it is a kind of loss for you. Loss for you. I'll treat it as expense. Okay, Nama? So I will treat it as expense. Let me see. First of all, which account will be affected, sir? Because you are receiving money, your cash account or bank account will be affected because you are receiving the money. Cash or bank is a part of assets, and assets will increase because you are receiving. Assets increase. Debit for how much, ma? Only 9,500 only you will receive. Only 9,500 only you will receive. Correct, ma? Just a moment, guys. I'll put in extra light for you. Okay. So 9,500 rupees only you will receive, not extra money. You will receive only 9,500 rupees. Correct? And next, sir, till now you are saying B is your debtor, B is my debtor, I have the right to take from him. Now he is paying, na? That debtor or the right will decrease. B account, or in general sense, debtors account. Now that fellow is a part of your assets because he's a part of rights, but that right will decrease now because he's paying. When assets decrease, you have to credit by how much ma? Full right of 10,000 will decrease now. Full right of 10,000 will decrease now. Acceptable, all of you? Full right of 10,000 rupees will decrease. Correct ma? So in this case, how will I treat? Sir, forgot. Debit by 9,500, credit by 10,000. What about remaining 500 rupees, sir? That 500 rupees is discount allowed or discount given. So discount allowed or discount received, as I told you, 10,000 rupees you have to receive, but you are receiving only 9,500, where 500 rupees is your loss. That loss I will take it as a part of my expenses or losses, and because you have given your extra loss, your expense or loss will increase. Amma, when expense or loss increases, you have to debit. Correct ma? Obviously expense increases, debit. So journal entry will be cash or bank account will be debited, discount allowed will also be debited, whereas B account or debtors account will be decreasing. Correct ma? So journal entry we will write here clearly. Come on, cash or bank account debit. How much ma? We are receiving only 9,500. Next, discount allowed, or even you can write it as discount given also. Account debit. How much discount you are giving ma? 500 rupees discount you are giving. Correct ma? So which is your expense or loss. Now how much to B account? You are right, or in simple terms, debtors account will be deducted. So it will be to debtors account 10,000 rupees. So this will be the journal entry in the books of seller whenever you give discount. Whenever you give discount. Got it, friends? Next, last transaction in the books of sellers. Okay, last transaction in the books of sellers. Come on, what is that, sir? We a seller unable to collect money from buyer. Okay, seller unable to collect money from buyer. Why? Because buyer became insolvent. Buyer became insolvent. Okay, Namma. Same example. Well, let us take. How much initially we have to receive? 10,000. Out of 10,000, 7,000 rupees I am unable to receive. I can't take 7,000 rupees. So I'm going to receive only 3,000 rupees and then keep quiet. Because B became insolvent, he is unable to pay, even I will not be able to receive it. So I will not take 7,000, I will take only 3,000 and keep quiet. Okay, in this case, what will be the journal entry, friends? Okay, so observe here very carefully. So first of all, you are receiving the money of 3,000. So your cash or bank account will be affected. Correct, ma? So cash or bank is a part of assets. And when cash or bank you are receiving, your bank cash or bank balance will increase. When assets increase, what you should be doing, ma? Debit. Debit by how much? 3,000. Till now you are saying your B account, or in general sense debtor account is your right, but now what is happening? That debtor's balance will decrease because that right you will not be able to receive any more money from him, and you received some money, so your right to receive the money will decrease. So debtors are part of assets and that right will decrease now. Correct, ma? So when assets decrease, what you should be doing? Credit. Credit by how much? Full 10,000 rupees decrease. Full 10,000 rupees of your whatever you have to receive will be decreasing. So, sir, 3,000 debit and 10,000 credit, sir. What about remaining 7,000 rupees, sir? That we will take. That is the amount that we are unable to receive. Whatever I am unable to receive on account of insolvency, I call it as bad debts. Bad debts. So I will use bad debts if at all I am unable to receive. So bad debts will represent what, ma? An inability to receive, unable to receive the money. So obviously, whenever this unable to receive situation, it is like your loss, obviously. Correct, ma? You are unable to receive, it's a loss for you. 7,000 rupees you are unable to receive. So I will take it to expense or loss category. Okay. So when you are unable to pay, your expense or loss will increase. Correct, ma? Obviously your loss will increase. When your loss increases, you have to debit by how much, ma? 7,000 rupees. Got it? So what will be journal entry? Cash or bank account will be debited, bad debts will be debited, and B's account or discount or debtors account will be created. So let us write the journal entry, friends, clearly. So journal entry will be what, ma? Cash or bank account debit. How much, ma? 3,000 rupees you are going to receive. Okay. Next, bad debts account debit. How much, ma? 7,000. To B account, or in simple sense, debtors account. How much, ma? 10,000 rupees. Full right will decrease. This bad debts is important point. Okay. So whenever insolvency happens, in the books of buyer, what will happen, friends? We are unable to pay. Inability to pay is taken to deficiency account. From seller point of view, inability to receive will be taken to bad debts account. Got it, friends? Just reverse of it. Okay. So trade transactions are over. Just I want to discuss two very important points in relation to these things. Okay, Nama? In relation to today's class, I want to discuss just two simple points, friends. Then we will wind up. Okay. Hardly I'll take 5 more minutes of yours and then we will close. Okay. Very important points actually. First of all, let me talk about discount. Here what is happening? You gave discount, Nama. 500 rupees discount you gave. Correct, ma? I want to discuss about that discount. Now, basically, this discount is of two types, my dear friends. Okay. One, we call it as cash discount. Okay, sorry. First one, we call it as trade discount. First one, we call it as what? Trade discount, first category. Second category, we call it as cash discount. First category, we call it as what? Trade discount. Second category we call it as what? Cash discount. Amma, trade discount means discount given at the time of sale or at the time of sale. If at all you give discount, what time, my dear friends? At the time of sale. When you are selling the goods, you are giving discount. Okay, Nama? But what is cash discount? At the time of settlement. At the time of when? Settlement. When you settle the money, at that time, if at all you give discount, you call it as cash discount. Trade discount is something you will give, what will be the discount given at the time of sale. We call it as what, ma? Trade discount. Cash discount means what? What will be the discount you have given at the time of settlement. Example, my dear friends. Let me take an example. All of you know MRP. Just for us to understand this example, I am taking this. Okay, MRP, not minimum retail price, maximum retail price. MRP mentioned on the product is 11,000 rupees, ma. Imagine there is a product on which 11,000 rupees is mentioned, but you gave a discount of 1,000, and then sales, you actually sold the goods for a value of 10,000. While selling itself, you gave a discount of 1,000 and your actual sales has happened at what price, ma? 10,000. Okay. But you have not collected money now. You will collect money later, you said. While collecting, again you gave a discount of 500. Again you gave a discount of 500 rupees extra discount you gave. It means how much money are you collecting? Collection comes to only 9,500. Correct, ma? Collection comes to how much, ma? 9,500. So here you are giving discount 2 times. First discount at that before sale, it means, or at the time of sale, 1,000 rupees, and second discount you are giving at the time of settlement. The actual agreed price is 10,000, but you are collecting only 9,500. In this case, friends, the first discount at the time of sale, whatever it happens, friends, this is my trade discount. This is my trade discount. Now, whatever be the discount that you have given at the time of settlement, you call it as cash discount. I hope with this example, you now got a clarity of what is trade discount, cash discount. Okay, Nama? Good. Why are we discussing this? You know, very simple. Never record trade discount. Don't record trade discount. Never it will be recorded, friends. Only cash discount will be recorded. Never record trade discount, record only cash discount. What does it mean? Sir, if for this example is concerned, how much is MRP? I am nowhere bothered, sir. I am nowhere bothered. Now, my sales account or purchase account will be taken at what price, my dear friends? 10,000 rupees. My sales account, it means from the seller point of view or from buyer's point of view, you will take how much amount, my dear friends? 10,000, because that is the agreed price. So your buyer or seller will record the purchase or sales with how much money, ma? Agreed amount, invoice amount only will take. What is the MRP actually? 11,000 is the MRP, but you are not bothered about MRP, my dear friends. What is the value on the tag and all? You are not bothered. What is the agreed price? Agreed price is 10,000. I will record only at this value. That's why, because you have recorded 10,000 rupees and you are collecting less, you will record cash discount and trade discount will never be recorded. Understand? Obviously, MRP is also ignored. MRP is also ignored. Got it, ma? MRP is also ignored. So what I require is only the amount which I have agreed and then how much am I collecting. In between cash discount comes, I will consider that. Okay, now friends, this is about discount. Okay. Fine. Now, second point I would like to discuss with you is about returns, good returns, ma. Okay, returns. Okay, nama. So, what is that I want to discuss about returns is, in our example, A sold goods to B. Correct, ma? Some 10,000 rupees worth of goods, and of course we discussed 30 days of credit period is given, blah 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 blah, all these things. Now, for this transaction, A is a seller and B is a buyer. Correct, ma? A is a buyer, sorry, A is the seller, B is the buyer. All of us know this well. Now, is there any proof of this transaction, friends? Proof. Yes, there is a proof. What is the proof, ma? Invoice. There is a proof of invoice. I have the invoice proof with me. That yes, A sold goods to B, B agreed for this. I have the invoice proof, and that invoice will also include the what all goods that have been purchased or sold, what is the amount of each thing, everything will be mentioned very detailed in the invoice. Agree? Now, imagine B is returning some goods back to A. What is he doing? He is returning. While returning, what do you call, ma? From buyer's point of view, purchase returns. So, purchase returns is happening. When purchase returns is happening, is he returning full goods? Sometimes full goods, sometimes part of the goods. Now, which goods is he returning and what is the value of those goods? There should be some sort of a documentation for that, right, friends? So, for that, B, while returning goods to A, it means while returning goods, we will issue a note to, A. We will issue a note to A. Okay. What is that note, sir? Wait for a few minutes, I will tell you. We will issue a note in simple terms. Okay. And that note will include what all goods are returned, what is the value of the goods agreed, and the description, etc., etc. So that once it is accepted by A, now this note stands as a proof that goods are returned by B to A. Once the goods are returned, there should be some confirmation from A also, namma. For that purpose, A will again issue another note. A will issue another note. So for A, what is the transaction, friends? For him, it is sales returns. Whatever be the goods that he has sold earlier, sales returns. Correct, ma? Whatever be the goods that he has sold earlier, the goods will be coming back to us. So to confirm that, this fellow also will issue a note just to confirm. So it means at the time of return, B will issue a note, A will also issue a note. And that note will include all the goods description along with the amounts, agreed amounts, and all this stuff, total and all this stuff. Now which note they will issue? Very simple, ma. Now let us get back to the journal entries, friends. In the books of buyer, whenever we have actually returned the goods, okay, whenever we have returned the goods, observe here, what have now from buyer's point of view, think from buyer's point of view, what did you do with A account, my dear friends? Whenever return of purchased goods, whenever you have returned the purchased goods, what did you do A account in the books of buyer? You have debited that fellow. Correct, ma? Now because you debited that fellow, B, while returning the goods to A, he will issue a debit note. He will issue which note, ma? Debit note, mentioning that Mr. A, I am debiting you in my books. I am debiting you in my books for these goods because I am returning them back. Okay, B will issue an information to A while doing the purchase returns. He will issue which note, ma? Debit note, because B has debited. Observe here what buyer has done, my dear friends. We have debited A's account in the books of B. Buyer has debited A's account. That's why as an information we are saying that I am issuing a debit note to you. As an information we are showing him that we are debiting it to in your books. Understanding, friends? Similarly, A has to confirm that, nama. For confirmation, what he will do? He will also give a note for the confirmation to confirm the same. What he will issue? Obviously he will issue a credit note. Why will he issue a credit note, ma? Very simple, because if you see in the books of seller at the time of sales returns, what are you doing with B account, ma? You are crediting that particular, see, B's account is getting credited. B's account is getting credited. Obviously when B's account is getting credited, my dear friends, so it is an information for that fellow saying that, boss, I am crediting you in my books of accounts. A is mentioning that I am crediting you. You means what? B. I am crediting you in my books of accounts. To confirm that, A credit note will issue a credit note. Okay, frankly speaking, if debit note says 2000 rupees, credit note should also speak about 2000 rupees only. Okay, if there is a dispute, for example, B is saying that I am giving you 2000 rupees worth of goods back, but A is saying no, it's not 2000 rupees, it's only 1800 rupees. So what will happen? There's a dispute coming up now. So these people have to sit together now for dispute resolution. They have to sit together for what, ma? Dispute resolution. Now they have to sit together, they have to resolve, saying that what is the agreed value and all. Okay, ma? Frankly speaking, this debit note and credit note both should be equal. Otherwise, there will be a dispute. Sit for meeting and resolve the disputes. Okay, now friends, this is about when you return the goods, debit notes and credit notes will come into picture. Friends, if you are following my explanation, if you are liking these videos, if you follow my explanation, my way of teaching and all, please ensure that you are watching the full videos of the playlist which I have mentioned in the description below, and also please share about my classes, about my channel and about this playlist to your friends. Encourage them also to learn better and face their exams with confidence. Thank you so much, friends. See you tomorrow with accrual system of accounting, which is very, very interesting and very important for your entire career if you would like to grow as a chartered accountant or a best accountant in the industry. See you tomorrow, friends. Thank you so much. Bye.